All right, Corning is currently sitting at 194.92. It was up 11.13% yesterday, and in the after hours up another 0.29%. So we're recording this on Juneteenth, so markets are closed today. Over the course of the last 5 days, it's up 2.72%. Over the last month, it's up 10.86%. Over the last 6 months, it's up 121.85%. That's Corning Incorporated, ticker symbol GLW. Year to date, it is up 122.61%. On a 1-year chart, it's up 286.59%. On a 5-year chart, it is up 403.67%. And on a maximum chart, it's up, this goes back to June 20th, 1986. It's up 3,450.46%, but that's not as much as I would have imagined. Corning pays a dividend of 0.57%. That's 28 cents a quarter. They have a PE ratio of 93.65, a 52-week high of $211.79, a 52-week low of $49.97, with an EPS of $2.08. They've got a market cap of $167.76 billion with 860.64 million shares outstanding and 67,000 employees. They last reported on April 28th, 2026. They got an EPS of 70 cents. That was a 1.21% beat of their 69% estimate. They missed on revenue by 3.77%. They were predicted to get $4.31 billion. They got 4.14. No bueno. We slide down to look at some of their past EPS and revenue here and their reports, and we've got a lot of misses, especially on the revenue side. And then when we get down here, we got misses on the EPS side. So they miss pretty consistently for whatever reason. Q1 2026, 3.77% miss on revenue. Q4 2025, 3.3%. Q3 of 2025, they missed by 3.2% on revenue. Q1 of 2025, they missed by 4.91% on revenue. Q4 of 2024, they missed by 7.15%. Then Q3 of 2024, they missed by 8.93%. And then they missed on EPS as well. All right. Old missers over here. They missed a lot. They missed a lot. Pretty crazy. All right. Interesting. So let's do this. Perspectives from across the web. Corning advanced significantly this month following a multi-billion-dollar Amazon partnership and AI data center demand. Analysts project continued growth through sentiments. Corning advanced significantly this month following a multi-billion-dollar Amazon partnership and AI center demand. Analysts project continued growth, though sentiment suggests caution due to recent parabolic gains and extreme valuation multiples. The next quarter depends on successfully ramping solar production and maintaining high-margin optical sales to meet upgraded 2026 targets. The bullish view. Major hyperscale AI partnerships. Corning recently secured a multi-billion-dollar multi-year agreement with Amazon to supply optical fiber and connectivity for data center infrastructure. This follows similar significant deals with Meta and Nvidia, positioning the company as a foundational supplier for the physical AI computing backbone. Strong financial outperformance. Q1 2026 results exceeded expectations with core sales up 18% and core EPS growing 30% year over year. Management subsequently upgraded its Springboard plan, now targeting more than $4 billion in incremental annualized sales by the end of 2026 with a 20% operating margin. Expansion into photonics. The company is transitioning into silicon photonics and co-packaged optics to solve AI networking bottlenecks. Management targets photonics-related revenue of approximately $10 billion by 2030, transforming the business from a cyclical glass maker into a high-growth tech infrastructure provider. Neat. Here goes the bullish view. Stretch valuation and overextension. Following a surge of nearly 290% in 1 year, the trailing PE ratio has ballooned to approximately 90x. Analysts have recently downgraded the stock to hold or neutral, citing concerns that current prices already account for earnings expectations as far out as 2028. Operational hurdles in solar. Execution delays at a new solar wafer facility have forced an extended maintenance shutdown for equipment upgrades. This transition is expected to increase operational expenses by approximately $30 million in Q2 2026. creating short-term pressure on profit margins. Aggressive insider selling. Recent SEC filings in mid-June 2026 revealed that corporate executives liquidated over 160,000 shares worth more than $30.7 million. Such high-volume executive profit-taking near all-time highs has raised concerns about near-term upside potential and dampened some institutional confidence. Alright, here's some analyst ratings. So based on 11 analysts giving stock ratings to GLW in the past 3 months, we got 7 buys and 4 holds with 0 sells. Based on 11 Wall Street analysts offering 12-month price targets for GLW in the last 3 months, we've got the highest one at $228. That's 16.97% upside from here. Average is 205.11. That's a 5.23% upside from here. And the lowest one's $180. That's a 7.65% drop from here. Wendell Weeks. All right, there he is. See, this is what I like. I wish it did it just like this every single time, but it doesn't. Wendell P. Weeks is an American businessman serving as chairman, CEO, and president of Corning Incorporated. Joining Corning in 1983, he advanced through key roles before becoming CEO in 2005 and chairman in 2007. Weeks drove innovation in products like Gorilla Glass for the iPhone, expanded into life sciences and optical communications, and holds dozens of patents. He also serves as on Amazon's board and advocates for long-term values-driven growth. He advocates for long-term values-driven growth. There he is. Look at that guy. He looks pretty smart, don't he? So there you have it, guys. Corning Incorporated. Currently at $195.49. What do you guys think? Let me know what you think about Corning Incorporated, guys. It's your cousin Dustin. Like and subscribe.